Hello members, it's Oliver Gordon speaking, and welcome to the weekly market wrap for the week starting Monday the 23rd of May. So we'll start with just taking a look at commodities, and the first chart being the CRB Index. Now you can see that the CRB Index has basically spent the last 2 weeks trading sideways above support, aligned with the lows back in March between 337 and 335, or 332 we could say. I still like the look of this chart to go higher in the near term. On Friday's bar is a very interesting bar in my opinion. You can see off this low here at 332 we did have a gap up in price. Now on Friday prices moved down, filled that gap and closed very high, so right near the highs of the day. So that's quite a bullish bar. I expect now that after going sideways and building a bit of a base, this market's ready to push higher. So as a minimum I'm looking for 351 to 356 up into this Fibonacci retracement zone, 50% to 61.8% of the decline that we saw at the beginning of May. So overall I'm looking for commodity prices to go higher near term. Now if we do get up into this region and we start to see some selling pressure, so weak closing bars and prices turn down, then I think we're going to find ourselves a very good selling opportunity up here for a new leg down to new lows. But we'll just have to see exactly how the price action unfolds once we get up into this region. But as I said, near term it definitely looks like good support is in and higher levels should unfold from here. As I've said in the past, crude oil, which is the next chart we'll just take a quick look at, makes up a large chunk of that index. Now again on Friday prices pushed down into this support zone around $95 a barrel, only to close high. And again, I'm looking for oil to push higher from here. I don't think it warrants a trade recommendation purely because this decline looks quite impulsive, meaning that the broader trend appears to have turned down, and any upside may just be corrective. In terms of upside with oil, if we put in our retracement zone, we can see that somewhere up between 104 to 107 a barrel is a possibility, and you can see that that region aligns itself with previous support through there that we saw in April, and also resistance just here. So it wouldn't surprise me if we retest this region only to then move lower. So again, similar to the CRB index, if we can get back up to 104, 107 and see some selling pressure, then we may be looking at an opportunity to go short oil. Out of all the commodities, there's only one market which I like the look of in terms of a buy, and that is the soybeans. We did touch on this chart. It may have been last week or the week before. This is the daily chart. If I start off with the weekly, and I'll just go zoom in a little bit, you can see a fairly strong trend from mid 2010, whereby prices have moved from this 950 region up to around 1400, and since reaching these highs back in January, I believe, I'll just go back to the daily chart. These highs back here, we can see that prices have traded sideways for some months. Now we've seen a few patterns very similar to this. It looks like a triangle in that we've got converging lines of resistance through here and also support. Now following a strong trend, triangles are a very common form of continuation pattern, meaning that we go sideways and then prices eventually break out. Now at the moment I can't really see a good entry price in terms of getting into this security. There is quite solid resistance through this region here, which has capped prices for quite a period of time, so between 1400 and 1450. It may be the case that we break up into this region before finding a good buying opportunity. At the moment, if we were to buy now, we're preempting the pattern a little bit, and added to that, in terms of a stop loss, we really need to have our stop down here below recent lows, and that is quite a decent distance between our entry price and our stop price, meaning that we can't trade a very significant volume. So I like the look of the chart, but just not enough at the moment to place a buy recommendation on that. But soybeans is probably the only market at the moment that I like from the commodities that I'm interested in buying, so we'll keep that one on the watch list for now. If we go on to currencies, start off with the US dollar index. The US dollar had quite a solid session on Friday, and the market's actually opened up very strong in Asian time zone today, and we're close to actually taking out new highs, but whether that is sustained in tonight's session remains to be seen. It's not uncommon for strength on a Monday to be reversed when we go into the US session, so it wouldn't surprise me if the US dollar eventually closes down tonight. Our slow stochastic is overbought, so following this rally I still think there's scope for a bigger correction in the US dollar, and that sort of coincides with the view that commodity prices still have some further room to go to the upside. So I'm looking for the US dollar to move back into this region, or at least back down to retest these recent lows down here at 74.75. But longer term, this rally does look very strong. We've got some very strong buying bars through here, so it does appear that longer term buyers have entered the market, and once we see a correction, the US dollar may be in for a period of some strength. We only have one pending trade in terms of the report, and that is to go long the pound against the Japanese yen. We've been very close to entering this trade over the last few days. We just haven't as yet, but the chart looks pretty good. Nothing's really changed. We've seen a good rally out of this retracement zone. Prices have been moving sideways but still look well supported, and I'm still interested in going long at our buy level, so nothing really changes there. For anyone that is new to the report or hasn't placed that recommendation, as it hasn't been triggered and I still like the look of the chart, you're more than welcome to place that stop entry price as per the initial recommendation. The only other currency that I quite like the look of is the Aussie dollar, and that's as a potential short recommendation. From the highs, you can see that we're starting to stair step lower in a series of lower highs and lower lows, suggesting that the trend in the Aussie is turning down. So I think it's a little bit early just yet, but there is good support through here at 105, and I think if this does break, then the Aussie could move lower. At least, if we look at this rally, at least back into this region down here towards 103.60 to 102.05. But if we go short at this level, it doesn't give us a lot of room in terms of a risk reward to place a trade. I'd probably be more inclined to look at a buying opportunity down here, looking at this entire move as corrective of this advance. But short term, the Aussie does look a little bit weak, especially if support at 105 gives way. Then we could be looking for a move, as I said, down towards this 103 region. In terms of equities, I did touch on the ASX 200 this morning, looking at the additional trade ideas, but I will just bring up that chart again. It's been quite a significant selling day today. I'm not 100% sure of the figures, but I can just look those up on Bloomberg, which I have on the second screen next to me, and that's just coming up at the moment. But you can see prices are back testing this support here at 46.40. Now this is an important region. It's been support. It's also the 61.8% retracement level. Realistically, if this move down off the April highs is corrective, then we need this level to hold, and it's very close to being broken at the moment. But if we can sort of stay above this level, then we may be looking at a rally, some form of correction, and then further gains for equities. So at the moment the ASX is down 67 points, so it's a pretty significant selling day. If we do break down through here, then I think we're looking at 4,500 as a minimum to retest the lows that we saw back in March. On the positive side, our momentum indicator, our slow stochastic, is still very oversold. And if I just move on to this second chart, over the last 12 months, oversold readings on the slow stochastic. It has been a very good indicator in terms of pinpointing the intermediate lows in this market. So we can see going all the way back through to 2010, anytime this indicator got down below 20, the market was in the process of putting in a pretty decent low. So we're back there again. The market has retraced over the last month, or probably going on 5 weeks now. The slow stochastic is in the oversold region below 20. So as I said, we need support to hold, and if that does, then we may be looking for a rally back up towards 5,000 for the Australian equities. If we move on now to the S&P 500, I think this chart is quite interesting because prices are really at an important point right now. From the high, it does appear that we've got this ABC decline. Now any ABC decline is corrective in nature, meaning that the broader trend here remains up and we should see new highs above 1370 over the coming weeks. Last week the US equities pushed up but then reversed on Friday, but you can see we're well above the lows set for the week at 1318. So as long as this level holds, I do expect this market to break higher. It would really take a move above this wave B here, which is just above or below, I believe, 1360, 1359. If we can get above there, then I think we've got a confirmed bullish flag, and we should be looking above 1370 and higher for US equities. One market that I was looking at, just before I move on, added to that, this is pretty important support down here at 1318. So if prices were to break this, then we're probably looking at a pattern fail in terms of the bullish flag, and the market could move lower reasonably quickly. Now, one indice that I was having a look at was the VIX Index, and I'll bring that chart up now. This is the chart of the VIX Index. It's a volatility index based off implied options prices, or implied volatility as part of options prices on the S&P 500 options. And often what you see is when equity prices are falling, you'll see implied volatility move higher, and that, in terms of this chart, coincides with spikes in the VIX index. So if we look at this second chart, this shows the VIX index up the top and the S&P 500 down the bottom, and you can see if we start back here in January of 2010, anytime equity prices move lower, we tend to see the VIX index move higher. This was the flash crash back in May of 2010, so 12 months ago now. You can see the VIX moved quite higher, up above 45, and more recently, back in March, when we saw that move down, we saw the VIX move higher. Now, in its own right, the VIX looks quite interesting at the moment. If I go back to that first chart, I might just turn that into a candle so it's a little bit easier to see. Now we can see we've had a decent rally off the lows, and since then the market has been sort of correcting sideways. On Friday, equities were down, the VIX index closed very high. There is resistance through here just above 19. Now if this index was to break higher, something like this, then that all looks very good for a decent sell-off in equity markets. So we'll be keeping a close eye on the VIX index. A break above 19 could be a warning sign that equities are due to go lower, and moving just back to the S&P 500, that would likely coincide with this breakdown of support at 1318. Now we can't actually trade the VIX index itself, but we can trade a futures contract which is based on this index, and I've got this chart up as our final chart. And this chart also looks quite good. So we've seen a decline since March, but you can see just recently prices formed this little triangle, broke down only to get a decent high closing bar on Friday. So whenever we break support, if prices close back into the range rather quickly, added to that you can see that we have bullish divergence on both the RSI. So the new price low coincides with a higher low on the RSI, exactly the same on the slow stochastic. So this all looks pretty good that a low has been put in. We've got a triangle, we've got an existing downtrend, but prices have broken support only to close back into the range. Added to that bullish divergence, that says to me that this market is set up to go higher, which is a potential warning sign that equity prices are due to go lower. But in terms of the ASX 200, I should say, we'll really keep an eye on this support region. If 4640 gives way, then we may be looking at a move down towards 4500. But until that happens, we do have support in this region, and if that holds, and we really need to move back up above 4760, then I'd be looking at the 5000 level. So it's a bit 50-50 in terms of equity prices at the moment. And just to recap, commodity prices short term, I'm expecting it to go higher, with the US dollar to soften slightly this week.